Hello, everybody, and welcome to today's episode of Trade the Chain. It is July 14th. It is Hump Day, which I really like. And today we're going to do our usual daily dose of the markets with our crypto analysts, CJ and Monty from MarketRebellion.com. And also we're going to do this. We're going to NFT his hair. And
that's man, let's do it.
Yeah, 100%. Sorry for the feedback there, but yeah, definitely going to NFT Ryan's hair. Probably auction it off to help the lonely cats or something, and we'll have fun doing that. But today, as you can see, we're using some new software, so bear with us. We did this for the AMA with Relay Chain. But we also had Rob helping us behind the scenes as a producer for that. Today, we're trying it all on our own, so it's definitely 100% going to get messed up. We hope you enjoy the laugh. That being said, Ryan, would you like to take us away so we can give the people what they want?
Yes, sir. Thank you very much, Alex. Great to have everyone back, by the way. This is just a reminder that all content provided by Trade the Chain and Market Rebellion is strictly for educational and informational purposes only. Absolutely none of this is investment advice. Not a single word of it. These are our views, and you probably shouldn't listen to them anyway. Trade the Chain is brought to you by TradeTheChain.com, a global community of traders in 23 time zones, people. 23 time zones. All ages, all backgrounds, all skill levels, and all using AI-driven sentiment indicators and actionable alerts to help them beat the market. If you, too, want to trade like a crypto insider, head on over to TradeTheChain.com and check us out.
And then moving over to marketrebellion.com/crypto. This is Monty and myself and our community at Market Rebellion. And with us, you get trading education as well as weekly trade ideas, entries, exits, and stop losses. We also have a charting platform that I'll show in just a moment. But you can find all of that and more at marketrebellion.com/crypto. Also, when we look at the Trade the Chain dashboard, I think I might be stealing Alex's intro here, but if we take a look at the dashboard, we can see that things are a little bit down from yesterday. We are more in the neutral sentiment when it comes to hourly and daily. Still seeing very, very low volumes collectively across the space. So interesting to note there. So anything you guys want to start off with here before we get into the TA?
I did want to let people know why we're late on Wednesdays. And we're late on Wednesdays. We have a broadcast time around 2:30, 2:45, and that's because CJ Monty actually do have a day job. They're not just YouTube celebrities. And Wednesdays are, go ahead, guys, tell us what Wednesdays are.
Wednesdays are our member webinars. We like to take an hour each week. Not only do we answer questions in the live chat for pretty much any time during the day, but we also like to have a 1-hour webinar each week where you can ask whatever you want, and we'll get to those questions and try to do the best of our ability to provide some good analysis and new education. But that's something we really want to allow you guys to have, and we want to make that time your own for members who can join. It's only $1. You can find that at marketrebellion.com/crypto.
That's 2 shills in a row. Sounds good. CJ, what do we got going in the markets today, buddy?
It's not great from the bullish perspective. I'll be completely honest. Actually, I'm thinking about, or am kind of taking shorts, just a hedge. But let me share my screen here. Couple extra steps to share other than Zoom. Am I good now, sir?
You're perfect.
Okay, thank you. So earlier in the week, we talked about this symmetrical triangle on Bitcoin, but now we've broken down from it, right? So we have to adjust the symmetrical triangle to a descending triangle now. And so if I zoom in on this, we can see that it's much more characteristic of a descending triangle pattern. We have a consistent level of support with repeated lower highs, and we have ultimately this descending trend line that creates the descending triangle. And so this 32 to 31K, I mean, really 31K is the heart of it. That's the breakdown level that I'm a little bit nervous of, at least from the bullish perspective. But I think we could have some potential downside opportunity here if that level does break. Now, if it does, we can extrapolate the measured move from here to the breakout point, which, like I said, would be roughly 31K. The initial realistic kind of breakout I see going to first 28K, and that's because we have our previous wicks down to that level. We might get a bounce if we do break, but ultimately the extrapolated end target for this would be roughly 25K and may take, a few weeks to play out. I really like comparing this to our breakdown in 2018, just at the start of the bear market. As you can see, there's been a lot of these triangle patterns throughout Bitcoin's history. And so Bitcoin traders are really they're very familiar with these triangle patterns because we've seen them time and again. Right here, we had a very large lack of volatility and lack of volume. And ultimately, it led individuals to capitulate, even though there were many, many individuals calling for a bottom here. So I don't think the bottom is in. I think that we're very similar to that period of time in 2018 where we're seeing a little bit of kind of complacency. And I think we probably will capitulate a little further downward. I mean, at least that's what the technicals would suggest. Nonetheless, if this turns into, say, a bullish hammer candle, and we can create a higher high above the previous lower high, then this descending triangle gets negated, and essentially we go back to something like more neutral, which would be like a symmetrical triangle. So that's what I see going on for Bitcoin, but I do want to reference some longer term timeframes here. And I want to specifically highlight this oscillator at the bottom channel here, the TSI True Strength Index. And so one thing that I want to highlight and how we can ultimately use this indicator as a tool to call a bottom is look at all of the bullish crossovers below the zero line, right? We have a zero line here that essentially serves as the midpoint. We have a bull market here. And so this is just strength. Although we have crossovers above the zero line, we're trending. So that's mainly just strength. Another indicator to look for are these crossovers below the zero line. Right there, we had a bullish cross, which ultimately took us up and started the current bull market that we're on right now. Same thing happened in like March and April. Now, we had one here, and I believe this would have been, the start of the next bull run if we had not had the COVID black swan. We had the COVID black swan. Nonetheless, we still recovered and created another bullish crossover just below the midpoint. So where does that take us or leave us now? Well, we're beginning to see diminishing returns, which is good. It means that weakness is kind of ending, but I still think this is going to continue to come down just with the lack of bullish momentum we've had. But after we have some bullish momentum in this trend, if we have some bullish momentum of this trend, I'm going to look for a very similar crossover like what we've seen here and here historically. So last thing I'll show, and I know this has taken up a lot of time, so I do want to wrap this up very quickly, but this is going to be the last thing I want to show. And this is the Shanday momentum oscillator. And as you can see, each time we hit this kind of oversold period, it really shows us that we're close to a bottom, or at least that bearish momentum is almost reaching like a pinnacle. So we had that all throughout the bear market in 2013, 2014. We saw it again when we had that breakdown after the descending triangle. And now we're actually seeing it again. But we're further down in terms of momentum and realized losses than we were during the COVID black swan. So I think that's somewhat notable. And what I'll be looking for a potential bottom is a rebound from that range. Of course, we haven't done it yet, but we're starting to. And so these are kind of two macro indicators on the weekly chart that I'm definitely going to be looking for going forward. But thank you for that time.
It's interesting you mention momentum there, CJ, right? One thing that I'm continuously worried about with the momentum the crypto markets have or don't have, and whether or not there will be that prolonged recovery. The parabolic bull market that Rob from Digital Asset News is mentioning there. We all kind of agree that there is a long-term bullish trend here, with the one exception being the equities bubble popping and taking everything down with it. S&P 500 just hit another record high today. This can't keep continuing and going through the summer without there being some kind of a correction. The stock market has already lost touch with reality. So it's only a matter of time until, what goes up must come down. What do you think the likelihood is of there being a correction in the S&P, and what kind of impact do you think that'll have on this bull market that Rob has mentioned in the comment below?
Monty, you want to start that one?
Yeah, sure. It looked like you were about to say something, so I was going to let you take the lead. But yeah, no, I think that that's a great question. And there definitely is that concern. I think that is the one catalyst that could lead to, a delay in this next leg up would be a significant correction in the traditional equity markets. And it makes sense because you're right, Ryan. It is, it does feel incredibly overbought, continuing to make new highs despite, concerning metrics with the 10-year yield and inflation and the DXY. Lots of, red flags in the market right now. And I think that if we were to get a significant correction in the S&P, that would definitely bleed over into crypto. A lot of people talk about Bitcoin as a safe haven asset. Definitely don't think it's there yet. And if people kind of moved into this risk off attitude, if the traditional markets sold off, I think that would definitely hurt Bitcoin. That being said, that could just be the catalyst to bring us down to 50 or 25K. CJ's talking about, some of these metrics looking like we're heading towards the bottom, not quite there yet. I think a bottom could potentially coincide with a correction in the S&P, and that bring us down to, 24, 25K for Bitcoin, and even as low as 1,500 for ETH. I think that all things considered, the correction in the equity markets could be, relatively extreme, but it wouldn't be anything that would necessarily crash crypto entirely. It would definitely sell off, but not back into the sub 20K range, in my opinion. So that's definitely something that you need to take into consideration in terms of timing the next leg of this market cycle, because I do think, there's a lot of red flags when you're looking at the S&P in terms of a significant correction in the interim coming soon.
Another indicator that I've continuously pointed out in this run up in the equities markets is CAPE ratios. CAPE ratios, you want them to be around like 18, 20, somewhere around there. They're at 38.44 right now. The only other time that they went this high was the run up to just over 44 during the end of the .com bubble. I mean, they're higher now than they were on Black Tuesday, and Black Tuesday was the only other time it went that high.
I'm sorry, I'm having fun with the comments, guys. I apologize.
Well, because I'm from New York and I couldn't possibly be a Mets fan. That's why, Vincent. But I'm very concerned about what's going on in equities markets right now. And, CAPE ratios have generally been able to call a top more often than not. And this is going all the way back to the 1880s. So it definitely concerns me, and it makes me wonder, okay, fine, Bitcoin may only go down to 20, 25K because that's where all the corporates and institutions got in, right? So hopefully they're able to hold that line, or else they're in the red. That 12% acquisition of MicroStrategy isn't going to look too hot if Bitcoin goes below 20K. But other coins, altcoins, they don't have that support, and there could be a bloodbath. And that definitely concerns me.
I don't have darn it, you just brought up something I totally skipped out on, Ryan, is the 12% acquisition of MicroStrategies by an outside capital group. That was yesterday. We saw the news. Mm-hmm. So let me ask you this, Ryan, since you're such a big Michael Saylor fan, that acquisition, was it really just, and we'll go back to what we've discussed in the past, was it just a company that's buying a synthetic Bitcoin ETF? What else would it be for?
I mean, honestly, I don't know why else you would buy it, right? What's MicroStrategy generating income from otherwise? Sure, they have a deal with Facebook and they do some other things, but does anyone talk about any of that? Did that result in anything but a meandering stock price for 2 decades before they started buying Bitcoin? That's if Bitcoin corrects below 20K, I think a lot of people are going to start questioning the wisdom of what Saylor's done and the wisdom of ETFs that have piled into MicroStrategy as a proxy for Bitcoin.
All right. Well, I just wanted to ruffle some feathers there. CJ, no, I'm not allowing you to talk.
Well, can I go back to the question about the traditional markets and not MicroStrategy, but
Yes.
just traditional markets in general? Because I do want to I want to look at the S&P and specifically the Russell IWM because that one is showing weakness that the Dow and the S&P are not yet. So I think that might be a leading indicator for the market as a whole. But let's take a look.
I think Will Clark makes a great point in the comments as well. You know, stock markets can remain irrational longer than we can remain solvent. And that's totally true. The stock market, I've been hearing a lot of analysts predicting a crash, all year because of the, excessive money printing, but it just keeps trending up. And I think that could potentially happen. We could continue to trend up until we hit that second leg up, and the crash could coincide with, a correction following that leg up, down from 100K. So I feel like, the Fed and, I feel like they could put off a crash pretty much as long as they want it. It just doesn't feel like there are a lot of red flags, but it doesn't feel like a crash is coming all that soon.
Yeah, I am in agreement with that because, when it comes to macro, I look at, I love what Tom Lee said. He's been pretty much spot on this entire market cycle when he called kind of the crash and the bottom there, ultimately, when many others were still very pessimistic, despite the fundamentals or the lack thereof fundamentals. But let's take a look at the S&P. Just want to confirm, Alex, I'm sharing.
Real quickly, will you pull that up, CJ? At this point, a lot of people have made so much money in equities that it almost feels greedy to stay in them because you don't know when the top is coming, right? Would you be buying into equities right now, either of you, CJ or Monty?
I'd still be long. Let me show this this chart.
Didn't answer the question. I didn't ask if you were still long. I asked if you'd buy.
I would, but not. Yeah. I'd wait for a regression. Mm-hmm. Am I showing the chart, Alex?
No, I don't see it.
Oh, Jesus, I forgot. Okay, sorry about that.
No worries.
Gonna have some rough bumps here with the new software, but
I definitely buy that chart. Yeah, take all my money.
So, each time we have a pullback slightly below the moving average, and then we have a bullish engulfing candle at the bottom, either the trend's going to continue and the trend's going to be your friend and go back up, or it's not. And you're going to put a tight stop loss below your initial entry point so that your maximum loss is not catastrophic. But when you look at this, we're starting almost one leg here. And, Brian McCormick, one of our technical analysts at Market Rebellion, who's been doing this for 30 years, still has projections of 5,000 potentially in the S&P if we keep going. Obviously, bubbles can be extremely profitable. You just have to be in liquid positions and be able to take profit before the bubble eventually pops. So I like that approach. The Russell, though, is a little bit weaker in the sense that we're below that moving average and we've lost kind of the parabolic trajectory. So ultimately, you got to be careful for a breakdown in the IWM, in my opinion. But as far as the S&P, there's just not really cause for concern yet.
When looking at the Russell, how can we use that as a leading indicator for the S&P or the Dow?
Well, when you talk about breadth in the market, you have many, you have 2,000 assets in the Russell 2000, S&P 500, you only have 500. Also, you're getting the majority of, massive tech stocks that make up a large percentage of the S&P 500. So that's going to affect the breadth of the market.
And most people don't know there's only 30 companies in the Dow. It's a very tightly focused index as well. So.
All right.
I still think the S&P is going to be good for the next 6 months.
But why? Why do you think it's going to be good? We have the Dow that's already overvalued as far as multiples are concerned. What makes you think the S&P is going to prop up the joint?
Well, there just hasn't been necessarily there hasn't been technical weakness. When there is technical weakness and when we break below that moving average, like I will look to go short and I will look to be flat the market. And even potentially look at VIX, call options at that point, because there probably is going to be a lot of downside volatility.
But the market isn't being held up by fundamentals, and the economy isn't strong enough to keep supporting the valuations in the stock market, right? There's nothing there.
Ryan, I don't think it is able to support. I don't think that when you do an intrinsic or fundamental analysis of the market, that we keep supporting it, especially with the money printing. I mean, the money printing can only go so far before it just begins to lose effect. I mean, this is all speculation. What the hell do I know? I'm not a trained economist. You don't have to be a trained
economist to know that money printing and buybacks are only going to hold the market up for so long. You can't keep papering over a bullet wound.
Well, that's what I'm saying. I don't see this elongating into spring spring of 2022.
No, neither do I. I think before the end of the year, there's going to be a massive correction in equities. And, it's not based on fundamentals or technicals. I'm not going to break out charts and do fancy analysis. I've been in the markets for almost 20 years. And, you get a feeling, you look at a chart, you can see something that doesn't add up and doesn't make sense. And, if I were still holding equities, I've sold, I've taken my profits. I would not, I might stay long, but I absolutely would not buy anymore. And my concerns about the equities market give me significant reservations about what's going to happen to Bitcoin and altcoins throughout the rest of the summer.
I will disclose that is that I don't know if anybody remembers who's watching, but CJ and I did a traditional portfolio review. It was back in the beginning of the year. And I bought a bunch of stocks to a portfolio back in the beginning of the year. I bought a bunch of stocks.
You good? I think you're good.
So, okay, that was interesting. So created a portfolio in Robinhood. We just had the dip in the equities market. I'd filled it up with what I liked for the long term and thought would come back, and made out really well, over 100% on most of the positions. But I will say that I have sold everything except my energy stocks. Out of 40 days ago, and I will tell you that I so far I've hit the top on all those stocks.
I know that I'm leaving profit on the table, but I'm fine with that. Right? It's better to leave some profit on the table than take losses. It's like being in a casino and winning all night and then getting greedy and going home without the shirt on your back.
Well, exactly. But I didn't have the conviction to keep holding on to them, right? So like if I was up, let's say an average 115% on all the equity positions, I felt like, listen, that's enough, right? When do we all cry? We all cry when we hold on too long. For 115% on 12-month equity position holding is enough for me, and I'm sad. If it goes up another 200%, I'm not going to fret about it.
No point.
CJ Monty, let's talk about Ethereum, please. Can we go into the Ethereum charts if you have them available? Because there's a lot going on with DeFi, and we're going to touch on that also with our news story today. But the Ethereum is becoming a lot of.
Yeah, Ethereum is, I think maybe the most exciting asset in terms of price action this week, just because of the fact that we're hitting some critical levels here. The 2K level has been breached. It was breached last night, and I was actually kind of encouraged to see that there were bulls willing to step in here at this next critical level of 1886. So as you can see, we went down, retested this level. Now we're getting a bit of a, it was a bit of a hammer candle. Now it's coming back down to form a bit of a more of a doji candle. But I think what we're seeing in ETH is very comparable to what we're seeing in Bitcoin. CJ talked about the emergence of a descending triangle. I think we're seeing the same thing here. You can kind of look to this 20-period smooth moving average as sort of an indication as to where that hypotenuse of the descending triangle is going to play out. And I think that one thing that is kind of important to consider now, because we're seeing this formation play out, and that's great, but what does it tell us about future price action? So I think that, looking to previous price action at the beginning of the year can tell us a lot about what we may see as this formation completes right here. So I just want to quickly highlight a couple of potential levels that I think are realistic price targets within just the next month. So first off, we have 1700 and about 30. This level of approximately 1730 has been tested with wick downs 3 times over the last month and a half. So as you can see, during the first big sell-off at the end of May, we whipped down to this level. It was quickly bought up around this price, and we went back up to retest the smooth moving average. But then once again, just a few weeks ago, we retested this level 2 more times with 2 pretty sharp wicks on relatively high volume here. So this level has held up so far. And for me, it's kind of serving as the base of this descending triangle that we're currently seeing for ETH. I also want to point out how important this level was on the way up as well. As you can see, during this period from about February 1st until about April 10th, or actually about April 1st, we were in this sort of range that was dictated by this level of about 1750. We were trading really around this level. There was so much both buy and sell pressure happening at this level. It had actually the strongest volume profile of any level on the way up for ETH. So there's a lot of trading happening at this level. I wouldn't be surprised if we saw some more buyers step in as we proceed to retest this level in the coming weeks. So I'll be watching for a completion of this formation. And I think that some realistic price targets, as we break down from this triangle, are all the way down here, 1350. We saw a ton of sell pressure here on the way up at the start of the year. I've been using the same sort of thesis of looking at price action at the beginning of the year to predict current price action. It makes sense if you look at things like money flow, that we kind of regress back to these levels. So 1350, I think, is very much in the cards for ETH. I think if we consolidate around this level of 1700, eventually break down at low volume, what the catalyst for that could be, I'm not exactly sure. That could be a correction in the equity markets like we were just talking about, or it could just be some news related event, or just general lack of volume and overall negative technical factors for ETH currently. So I expect us to consolidate around this level of 1700, and sometime around maybe August, perhaps break down and retest levels of 1500 and ultimately 1350, where I think we will find a bottom for this current market cycle before going on that next leg up. One thing I will say is that ETH has seen some positive price action today. That's been reflected in some more downstream assets, DeFi assets, some NFTs as well. The 3 big winners today, Comp, Mana, and Engine. We talked about those earlier in the week on this show, and how they kind of differed from Bitcoin in the fact that they're above their moving average as opposed to below. So now we're seeing a little bit of positive price action in ETH. It's being reflected a bit more, kind of double fold here in some of these more downstream assets. So that's what we're seeing for ETH. Not too different from what we're seeing from Bitcoin, but it is a bit different in the sense that we're right around this critical level of 2K, which today alone is acting as resistance and kind of setting us back down to this level of 1886. So that's what I'm seeing for ETH, and that's kind of what I'm expecting over the next couple of weeks in terms of price action.
All right, very cool. Thank you very much for that, Monty. That was pretty detailed. CJ, would you like to chime in on that?
Thanks. Yeah, I would, before we get to Erik Voorhees and ShapeShift news. But yeah, I want to talk about specifically Bitcoin dominance and how it plays into ETH, as well as ETH dominance and kind of this overall market. So,
we got our first thumbs down. Peter Schiff is here.
Hi, Peter.
Hi, Peter.
I grab drinks. We're right down the street from each other.
You guys seeing this?
We do indeed, sir.
Awesome. So if we just highlight Bitcoin one more time, throughout this entire uptrend, obviously we have Bitcoin going up, but we have Bitcoin dominance decreasing, especially when the altcoin market goes and everything enters into risk on territory. But when we see it increasing, that's typically bearish, right? We see this massive rip in Bitcoin dominance all throughout kind of the bear market cycle. And so what we see now is kind of exactly the inverse of what we're seeing, not only on Bitcoin, but tentatively on Ethereum as well. You know, we're now above the moving average, we're above critical support levels, and we're in a very similar ascending triangle. So that's kind of strength, and that's showing, in my opinion, that we may have some further fear coming. If we go to Ethereum dominance, it's like the literal inverse. You know, we have a bearish descending triangle. And then if we look at the altcoin market, excluding Bitcoin, it's not quite a descending triangle. I mean, it kind of is. I mean, we had this wick down initially. So if you were to extend this downward sloping trend line all the way, you know, it would kind of be a descending triangle. But, you know, we're just seeing very, very bearish posture overall when it comes to ETH. And then the fear index of crypto being Bitcoin dominance, it's looking bullish.
I mean, there hasn't been anything really to catalyze the market upwards, right? Like, it's the summer, nothing really happens aside from that search for yield that spiked DeFi up last year during July and August. I don't see what's going to send anything parabolically higher like it would in the spring, you know, fall or winter when there's things going on. Everyone's finally able to travel and get out and do things. They're not really making announcements or sitting in front of terminals all day like they have been for the past year.
Yeah, I'm with you on that one, Ryan. I think you know, one of the catalysts for the bull market was the fact that there was people glued to their screen because of the lockdowns and stuff. So now that we're opened up and people going back to picnics and pools, you know, we see the volumes going extremely low. And so now I do wanna boast for a second, if I may, because I lost. Monty's out. I lost the. I stopped posting in our community for a little bit because we'd been so busy with everything. So, wow. Whoa.
Okay.
Yeah, I don't know what that was about.
Ghosts in the machine.
Let me do a window. Here we go. There we go.
Bang.
So I posted my entry and exit, and this is Audius. And I haven't done this in a while in our community, so I was really happy I did, just so people don't think I'm a face on the tube. But 138 was the price earlier today, and I originally posted the entry point back here 48 hours ago at 93.
Nice.
Yeah, so it was good. Sentiment was looking good on the charts. And so I took it for a 48% ride in 48 hours. So I was really excited about that.
Nicely done, man. Good for you.
Yeah. So I was happy. But let's get over to the news of the hour. Shut down. Now, Ryan, you know Eric, you know ShapeShift, you know he's OG, right? So we're all familiar with him. I saw this article and I was like, whoa, it was definitely clickbait. But then I read into it.
Yeah. So I think, you know, we were talking before the show about kind of how inevitable that this all was, right? Because the whole point behind ShapeShift was to enable people to just swap between coins. And now that you have all these DEXs and you have all these other platforms, you know, even just MetaMask and Relay and Uniswap and all that, they've been slowly taking trading volume away and from ShapeShift, and now they basically don't have much left. So they've made the logical decision to kind of just disband and go home, take their ball and go home. So I guess there is one positive to it. That airdrop that they're doing, I don't know too much about that, the whole Fox token airdrop, Alex. If you're a little more familiar with what's going on there, I'll defer to you on that. But it looks like they're going to take care of their longtime users in a positive way, even though they're going away. But I honestly don't know what's going on with that.
Yeah, well, I think so this Fox airdrop is $98 million. And I think it's the largest actually in history. I could be mistaken, but I do believe it is. And one of the things that's really fascinating about this story is, listen, this company was founded in 2014 when majority of the people watching this show didn't even know about Bitcoin yet. So it's been around a while. And if you don't know what ShapeShift is, it's a non-custodial and swap trading platform, very popular, operates in the United States and whatnot. But this closing of doors is they're trying to make it so that it goes fully autonomous, ShapeShift. So it's not disappearing. It's just going to have no employees. So I'm curious to see how this science experiment works out. And even Erik, said it's definitely radical. So we'll see. But I definitely would like to hear how people feel about having completely autonomous counterparty in crypto.
But isn't that kind of what they've done with Relay, where it's completely automated, or like a Uniswap? Isn't that completely automated? I don't see how it's different.
Well, Uniswap and Sushi and all those guys, they can still, I believe they can still have human input. I believe the chef can still have human input into SushiSwap, and the same with Uniswap's team.
Yeah, and I think also one big difference will be now the entirety of ShapeShift will be open source as well. So all that, back-end code will be available to everyone. I guess Uni and Sushi, I'm not too sure if they're open source. Uni and Sushi look like they're essentially clones of one another. So I'm pretty sure they may have just copied code there.
Yeah.
But, I think that in terms of just opening up the entirety of ShapeShift's infrastructure, their market making, everything is going to become decentralized, and there won't be a company behind it. Instead, it'll be governed by the holders of this Fox token, I guess.
How much of a difference do you think this is going to make? Do you think more people will use it? It's been losing trading volumes for a while to lower cost competitors. I don't know that it's going to make this any more viable. It feels just like it'll be a long, slow sell down of Fox, and then everything kind of just vanishes into the ether.
Nice pun.
There's a good little picture of our friend Lucas.
Hi, Lucas.
That's Lucas's corporate headshot, I think.
His LinkedIn profile pic, yeah. I think if you don't know anything about ShapeShift, or if you're a little new to the space, that I think we should lay some context for Erik Voorhees. He's a very profound libertarian, and he's always been very anti-government. He started ShapeShift so that there could be a exchange which didn't require KYC or AML or anything of that sort, something that you could just fully do on your own. And it was pretty cool. I used it in 2017. It was a cool exchange to use, but they were forced to implement AML and KYC into their exchange, and that pretty much took away their entire competitive advantage, because now they had to compete with things like Coinbase and things like Kraken, and that's very difficult. And so they couldn't go back to what they were initially, which is kind of a decentralized exchange. If you think about it, they were based off swaps, but now we have things like Uniswap, we have things like SushiSwap, and PancakeSwap, for instance, and those compete with these things are a little distracting, these messages on the bottom. They've essentially made ShapeShift rather obsolete. So I don't think this is a bearish thing for the space whatsoever collectively. I just think it's a specific case within ShapeShift, because I can tell you firsthand, there is more institutional interest and effort in crypto, whether it be through clearinghouses or setting up various aggregators. There's serious interest in crypto. It's not going away. And, fundamentally, I think we're still very strong. But going back to our previous conversation about the stock market and the equity market, that's going to dictate a lot.
So you don't take Larry Fink, BlackRock.
I was just bringing that up.
Larry Fink at his word when he said that there's no interest in crypto at all?
You just stole my thunder.
That's just not true. I know. It's like the FX market in the 90s. People want a piece of it. They want to be building the picks and shovels, so to speak, and they're all over it.
You're correct. Larry Fink I think those
What?
comments were a bit self-serving.
Tell me why though, Ryan. Tell me why, because that's a bit. I saw that comment from him.
Because he's not a crypto asset manager, right? He's in equities, he's in other alts, he's in other asset classes, and he doesn't understand crypto. He's proven that time and again. So he's basically taking a slightly more elegant approach or eloquent approach than calling it rat poison squared. But at the end of the day, it's a very self-serving comment, because until they launch crypto products, of course, there's no demand for it in his eyes. So
that's kind of a clickbait headline, because he says there's little demand for crypto as of late. Like, I agree with that statement completely, not from an institutional perspective, but retail money, there hasn't been demand in crypto ever since we've capitulated, really. So,
anecdotally, with the firms that I work with and the asset managers I talk to, I won't name names, but that's just a flat out lie. Maybe he personally isn't seeing any demand for it, but I know of retail asset managers. I know of other asset managers that are seeing inflows despite what news headlines say about outflows and what have you. So whatever. But one thing I wanted to ask you guys about, I'm curious what you think. Federal Reserve Chairman Powell, he was on Capitol Hill today testifying, saying that if there were a U.S. CBDC, central bank digital currency, pegged to the dollar, it would make stablecoins irrelevant. And it could potentially make cryptocurrencies as a whole irrelevant. That's obviously a loaded statement there. I'm wondering what you three esteemed gentlemen think of that.
So in terms of, replacing Tether with a central bank digital currency, I do think that a successfully launched central bank digital currency could steal some of the market share away from the currently very popular stablecoins like USDC and like Tether. But to say that, all crypto in general would suffer from the issuance of, a central bank digital currency in the United States, I think is not necessarily true. We talked this morning about, the EU exploring the possibility of implementing a central bank digital currency. Well, the thing is, if you think about the ethos of crypto, one thing, and we're coming off that story, the ShapeShift story, which, Erik Voorhees is one of those people that is very true to the ethos of crypto. He was here early. And one thing that people that were here early understand is that a lot of this has to do with, financial freedom, anonymity, freeing yourself from, the government's stranglehold on the financial system. So I think that there would be a lot of reluctance for people to go back to like using a central bank digital currency. I could see, the central bank digital currencies being used similarly to how Tether and USDC are currently used, in the sense that, they fuel a lot of the on-ramp capital that comes into the exchanges. So a ton of, people could be, using these CBDCs to, make Bitcoin or Ethereum or other cryptocurrency trades. I don't necessarily think that a central bank digital currency would be a competitor to Bitcoin or a lot of other cryptocurrencies, because, the whole reason they exist is, counterintuitive, I guess, at best.
The only positives from a government's perspective, or the only real differences between a Fed coin or something like that, or a USA coin, between something like, USDC, is that the government controls it. They can print, anything they want, and they ultimately have entire surveillance of that particular blockchain network or whatever they want to put on it. So there's no benefits to that thing, to the average citizen, other than the fact that it'll probably provide more financial inclusivity to those who are unbanked. But
a lot of those people who are unbanked can't even get a cell phone, right? Because they can't pass a credit check, or they won't get a prepaid cell phone. So how are they going to use it? And I think ultimately, right, we talk about how Bitcoin helps the unbanked and how all these crypto projects, so you need internet access to take advantage of them. And the people who don't have internet access are the ones who are generally unbanked. So we have a long way to go to get to solving for that problem. But going back to what you were saying about the surveillance state, the dollars I have in my pocket, I don't know, I have like 40 or 50 bucks in my pocket. I can go out and buy whatever I want with that. The government has no idea if I bought a pack of gum, cigarettes, a bottle of vodka, or whatever else it is that I want to buy. If there's a CBDC, they know every single thing I buy at all times. And that spooks me. Not that I have anything to hide. It spooks me. Like it's a weird prospect. It's very,
Do you still care though? Do you still care? I've given up at this point. I figured we've done too much detriment to our own good that we're always going to be tracked. Everybody's going to know everything.
I care. I like being able to buy a beer without the government knowing I'm drinking a beer, because then they could take that data and plug it into your health insurance, right? Then your health insurance company can know how much you smoke or how much you drink, and that can raise your rates or cancel your coverage. And all of a sudden, all this data is usable by all these different entities that have access to this blockchain. And I feel like, I don't know. It feels like a violation of my privacy and my civil rights to be tethered to that.
I know. Go ahead, CJ. CJ, go ahead.
Think about waitresses and waiters from a humanitarian perspective. Like, they need tips to live. There needs to be some element of like tipping in our society, I think, and that goes away if you eliminate cash from society. So I completely agree with you, Ryan, but go ahead.
Oh, wow. So maybe here's an interesting thing. If a Fed coin comes into play, then maybe the government will institute a 10% emissions to poor people off transaction fees as a governance.
No. They're just going to print as many digital coins as possible to keep everything funded in the stock market number go up.
I am going to end the program on this last segment, which I'd like to cover because this happens to be one of Mr. Gorman's clients. And so a little ways back, there was SEC delay on a Bitcoin ETF, but I would like to congratulate Mr. Ryan Gorman because today they successfully launched an Algorand Trust. Ryan, give us some excitement. What's going on from Mr. McClurg and the team over there?
Sure. So they're not the only Algorand Trust that's currently available. There's another one that was launched, I guess, a month and a half ago. But they are the only one that's going to generate a staking yield with a target of 4 to 6% through staking of Algorand within the trust, right? So not only do you have exposure to the potential upside of Algorand, you have exposure to staking benefits, and you can generate income off of this. So this is just yet another creative way that the digital asset ecosystem has come up with, replacing, the fixed income instruments that aren't generating any real returns because their interest rates are at historic lows. So, this is a really cool product. It started out, it's got a 10 million AUM, and they're really excited about it. Inbound interest has been strong, so I'd expect that AUM to grow pretty quickly.
Very cool. Well, congratulations on leading their PR and media efforts, as they always seem to wind up in the top publications of crypto.
I do what I can.
Oh man! All right, so I have a few announcements for the viewers watching, and if you're a TTC member, we'll drop this into our Discord channel. And that is one. I don't know if any of you forgot, but we had the big $10,000 TTC Trade the Chain member giveaway last month, and that drawing is coming up. It was actually supposed to be slated for tomorrow, the 15th, but because of some team travel issues, we're going to just postpone it until after the weekend. And the reason we're going to do that and not announce the winner is because we're going to choose the winners in a randomizer selection process online in front of everybody on the live stream. We wanted to do that. That was the big thing about it. So that way everybody knew it was fair and square and all that good stuff. So if you entered, we'll announce that drawing after the weekend, live, randomly picked by a non-human. So we're excited about that. Also, since there's some issues tomorrow with travel and work with our team, we will not be having an episode of TTC tomorrow on Thursday, which is we apologize for, nor will we be doing it Friday, as we sponsor a NASCAR and it's heading to a track in New Hampshire. So
yeah, buddy,
we have to go.
Have fun at the race on Saturday, by the way, because I got one of the worst sunburns of my life. I mean, I have blisters on my lips. It looks like It's not fun, man. My face is peeling. The only reason I look presentable is because my wife covered me in vitamin E oil, so it doesn't look like I'm peeling. But I look like a leper.
You had a smile like nobody's business that whole race day.
Oh, it was great.
Wes, I want to answer your question here. Wes is one of our longtime members of Trade the Chain. We enjoy his input that he always adds into the community. And no, you did not need to own Cent for the drawing of the member giveaway. But yeah, so CJ, since we're not going to have an episode on Friday, who do you and Monty and the rest of the crew over Market Rebellion have coming on for cocktail hour?
I don't believe we have any new guests this week. Typically, it's go ahead.
I think on Monday for the roundtable, we'll be having Tony Dwyer. But on Friday, it's just the Market Rebellion team. Okay.
I like that. I like that Tony Dwyer chap.
He's a bull. He's a macro bull.
So definitely, if you're a member over Market Rebellion, tune in for that. That'll be cool. And don't forget to click on the link in below of YouTube channels where, of course, we have Rob. Okay, he's part of the family. Everybody knows him already. But we also have the link for the Daily Crypto Bite that CJ and Monty do every morning. Which is always a good head start to the day. Kamikaze, nobody won yet, all right, but we'll let you know when we pick somebody. All right, folks, hang on to your handlebars. Thank you for being with us. Ryan, did I miss anything we had to say or anything?
No, I don't think so. Good luck landing this Saturday.
Yeah, good luck landing this Saturday in the race. Everybody root for him, please. I think I did have something to say. I'm not sure.
No.
Nothing to say. All right, guys, take it easy. Have a good one, and we will catch up with you on Monday unless CJ calls me with some breaking news.
Bye, everyone. Thank you.